Hey guys, what up? In this video I want to talk about a lot of stuff. It's a lot of tips and hacks and a lot of stuff. I want to teach you some strategy and how to start trading and where should you start. Okay, first of all, when you see a chart, when you see a trend, whatever, you have to ask some questions, and before that you have to realize what kind of trend you have in the market. You know, generally we either have breakout or trading range or channel, which this channel itself can divide it into tight and broad channel. So let me write this down. This one, we have breakout or channel or trading range. These three phases of market, we have them, but this channel itself could be either tight channel or a broad channel, and we have different approaches toward each of this shit. For example, if you have a breakout, if you have a strong breakout, if you have a strong bars, you just trade in direction of that breakout. If it's a bull breakout, you just buy it like this. You don't wait for any goddamn pullback, because there's no any, at least in this time frame. If you look at it in lower time frame, you can't see the pullbacks, but in this time frame you can't see shit, and you just swing it. You don't scalp this one, just swing trading. Do swing trading. You don't have enough time to enter the position and get out the position. You don't have time for this shit. Okay, so you get this leg or and enter the position at this candle and get out the position here, and then you get, for example, 70 or 80 pips. Or this one is a pull, it's a breakout. Breakout of what? Breakout of this level. You have this trading range, which is another phase of the market, but yeah, it's a market cycle. I'll talk about that. I talk about that before, but in market we have three kinds of forms. It's a trading range, breakout, and channel. Yeah, I'm talking about it right now. Kidding me? So in channel, sorry, in breakout you just sell if it's a bear channel. I'm sorry, if it's a bear breakout, you just sell it. You don't wait for pullback, because there's no any pullback. You don't have time. You swing it. You swing trading, because scalping, we only can do a scalp when there is a pullback. But when there is no pullback, so scalping doesn't mean anything. This one is a breakout. You just sell here and get out the position at this one. Pullback from what? Pullback of breakout of what? Breakout of this one, and you can see the pullback here. So that's the breakout phase. What about the channel? We have two kinds of channel. It's either broad channel or tight channel. When there's a considerable pullbacks, it's a broad channel. When you can get out the position, it's a broad channel like this one. When you can trade in both sides, you can both sell and you can both sell and buy. It's a broad one, and sometimes it's broad enough. It's broad enough that we can consider it as a trading range. What about this one? It's a channel and it's a broad channel. You can sell high. I can sell it as sell high. It's a bear channel, bear broad channel, broad bear channel, and we can also trade it in opposite. You can also scalp it. When you have channel, when you have a broad channel, specifically we do scalp. We scalp it. We buy here, we sell here. We enter the position at this point, we get out the position at this point. That's what we do. But what about yeah, it's also this one. It's a broad channel, but what about tight channel? What about it? This is the channel, but this it's a tight channel. Let me erase all of this shit. There's too much shit here. Where's the eraser? Okay, there's no eraser. Sorry. So this one is a tight channel, but and it has some pullbacks, but we don't have that much time to get out the position and enter the position again. So it's better if you just swing it. You can also scalp, but it's hard. And you swing this shit just in direction of the trend. If it's a bear, you just sell it. If it's a bull, it's a bullish, you just buy it. This one is also it's a tight channel, but you can also consider it as a tight broad channel. It's a tight channel, I think, or a broad channel, I don't know. It's a tight. This one is a tight channel. We have you can also get these pullbacks here, but they're not that much profitable. For example, if you wanna get this small, tiny, teeny bars, it's not worth it actually. If you wanna get it, it's this one is a tight channel also. It's not hard to realize it. See, this is your pullbacks. How you wanna trade this shit with this big shadows, long shadows. It's hard. It's fucking hard. This one. What about this one? It's a kind of broad channel. You can also get these pullbacks. So if the channel, you can get the pullbacks also. So it's a broad channel. But if it's hard to get the pullbacks, it's a tight channel. That's a tight channel. Still, it's a higher tight channel. But what about so tight channel we traded just in direction, but broad channel you can trade it in both sides. Breakout also, it's at the trend direction. If it's a bullish breakout, you just buy it. If there is a bearish breakout, you just sell it. And these two, and both tight channel and breakout, you should try just do swing trading. So for this first two, for breakout and tight channel, you can trade it. It's better if you just do swing trading and not the scalp, but and just at the direction of the trend. But trading range and broad channel. You can do it both sides and do scalp. The scalp means you enter the position and get out the position at some other point, and you can enter the position again. So it's both side and a scalp. It's a swing and just one side for swing. Okay. About trading range, you probably know about trading range, but let's talk about it again. What do we have here? Yes, it's a broad bull channel. You can both buy and sell this shit. You buy at the bottom and you sell at top. Okay, we have this trading range here. As you can see, you can buy here and sell at top. Yes, this is it. There's something interesting about trading range. When you see a trading range, you can divide it by three. Divide it into three parts. Why is that? I'm gonna tell you. But let's do it. Let's divide this shit into three parts. Why did I do that shit? This 1/3, we have 1/3 here, 1/3 here, and another 1/3 here. So we divided this trading range into three parts. We have this upper area, which we call it sell area, sell zone. We have this down and bottom area, which we call it buy zone. Why is that? Because we buy at this bottom and we sell high, but it's not a statistic. In price action, it's not a statistic. It's about frameworks. We have some boundaries, but we don't have solid and concrete and stiff rules. We don't have this shit. You see, at this point they form a reversal at this price, but here at a lower price, here it's different. So it's not stiff and it's not solid. Yes, it is solid, but it's not concrete. It's flexible. We have rules, they are flexible. So we when I do this shit, I say in trading range, this is the area you buy and this is the area you sell. For example, when price enter to this area, you have to prepare yourself for a reversal. So you wait for a signal bar like this one, and you enter the position at the next bar on the in the next bar, and you put your stop, you put your take profit just below this sell zone, and you take profit here. Your risk to reward is good, and you make 38 pips, for example. Another example here. It's when price reaches at this sell zone. I want to show it with red. You prepare to yourself because you know it's a danger area. You have to prepare yourself because there might be a reversal. And yes, after you see a signal bar, you enter the position, you put your stop above this area and you take position. Here it's a awful risk to reward, but you can also put your stop above the signal bar. It depends on, we have plenty of different risk management. It depends on your strategy and risk management, but if you should put it this way, you can make money from both sides. You can also apply this in trends. It's not just about trading range. When you have a trend and you want to buy, you consider the recent leg when you are at this point, at this pullback, at this area. You consider the recent leg, and you consider first two-thirds of the leg. If you divide this shit into 3 parts. Let me make sure about that. And you divide this shit into 3 parts. You consider the first two-thirds, the first 2 parts as a buy area. You buy at these levels. When price forms a pullback, you buy at this area. It's a 2/3 of the recent leg. 2/3 of recent leg, and you buy. As you can see, we have a pullback here. And why is that? Because in most cases we have a pullback to like 30% pullback, which is 1/3, approximately 1/3 equals, it's a mathematics, 33 or so. And but at some points we have 50% pullback, which you can see it somewhere in the middle of this box. So we usually have, if it's a broad channel or it's a trend, it's a normal trend, we expect to see a pullback at this area, which we buy it. We can buy it here, we can buy it if price reach at this point. It's not trustworthy anymore, because when price hits its bottom, it forms a kind of reversal pattern, so it's not solid anymore. You don't want to buy it anymore. What about bear trend? In bear trend, the same thing, but in opposite way. You have this leg. You consider the at first you should divide this shit into 3, and then you can consider the area. So the first 2 parts is your sell area, because you sell here, because it's a bear trend. You sell it, you motherfucker, you sell it. Sorry, just kidding. So you sell it at this area, because as I told you, we usually have a pullback at this area. It's sometimes 50%, sometimes 30%, sometimes more than that. But yeah, when price enter this area, you might wanna sell it and take a sell position. And that's 2/3 of the entire lake. You have this entire lake here, you have this entire lake here, and that's the 2/3 of it, the first two parts. Okay,